Hello everyone. Today we'll be talking about forex market, and to start with, we start with lesson number 1, which covers what is forex. So in today's lesson, we say that forex is the exchange of foreign currencies, which involves buying and selling of currencies simultaneously. So, talking about forex, we say that forex is a global market with a daily turnover of $6.6 trillion. Okay, so when it comes to trading forex, we say that you'll be buying and selling currencies differently, with different fluctuations in prices. You'll be depending with fluctuations in prices. In trading forex, we'll be dealing with different assets, and the first thing that we'll be dealing with is commodities. We'll be trading commodities. A commodity like gold, XAU. We'll be dealing with currencies as our second asset. Currencies like the dollar, US dollar, that's a currency. We'll be trading currencies. We'll also be trading stocks. We'll be trading something like cryptocurrency. We'll be trading something else known as indices. And lastly, we'll be trading things known as CFDs, the commodities for differences. Those are the things that you'll be dealing with. And the way to trade commodities is the same way you trade currencies. It's the same way you trade stocks, cryptocurrencies, indices, and CFDs. Are we together? So, after knowing what is forex, the second thing that you should be introduced to is the history of forex, where the forex market started and how it came to existence. So the next topic is the history of forex market. The history of forex market, or the history of forex trading. So when it comes to talking about the history of forex trading, it's a big topic by itself, and we start by saying that you may know the forex as the market that never sleeps and where trillions of dollars are traded each day. But exchanging currencies has been around for longer than you think. Currency trading and exchange has been around since ancient times, with evidence of coinage exchange appearing in ancient Egypt as early as 259 before Christ, or BC. So, trading forex started back in those days during the coinage system in Egypt, during the gold, when gold and silver were used as the medium of exchange. That's when the forex market started. But back then, forex market was not that welcoming to small retail traders like me and you, but it was used by banks, the big banks and corporations. These were the biggest participants in the forex market back in those days. With time, around 1980s, when there was the introduction of the banking system, we said that it started something welcoming to even to new traders, or even small retail traders like me and you. It is during this period the forex market started around 1991. And back in 1991, we said that the forex market had like a daily turnover of $10 billion traded a day. And with time, with technology, how technology started coming into existence, or how technology advanced with time, retail traders like me and you started trading the digital currencies. And around 2003, the forex market had participants who were making the daily turnover in this market to be like $1.3 trillion a day. With time, as technology advanced, currently we talk of forex market having a daily turnover of 6.6 trillion traded a day. So you can tell that with time, forex market will be something gigantic, and it will be having a daily turnover of more than $10 trillion traded a day. It means that there is no way you be trading forex, you make profits, and there is no money to sustain you, or there is no money to pay you. There is no way you want to participate in the forex market. You want to buy or you want to sell anything, and then there is no money to sustain you or to sustain your order. Every time you trade with this kind of a daily turnover, you can be assured of the market giving you something, or you can be assured of getting your profits once you trade. Okay, so that covers the history of the forex market, how the forex market started, and how it came to existence up to this day. So our next lesson will be on who trades forex. Who trades forex? When talking about who trades forex, we want to see the participants in the forex market. These guys who are making the forex market to be this huge. These guys who are bringing about the daily turnover of $6.6 trillion a day. So when talking about who trades forex, the first and foremost people to trade forex market are known as the central banks. Central banks. As you know, central bank or the banks are the ones who brings about the chart of a certain currency. So we call the central bank the market makers. They are the ones who make the forex market. The central banks do participate in the forex market. They do trade the forex market, and in this case, they make the forex market. We call them the market makers in the market, in the forex. The second category of, or the second group of people who trade forex are known as investment managers. Investment managers and hedge funds. Hedge funds are large organizations which funds people with money, or which funds companies with money when companies are falling down. Hedge funds do help them with money. So hedge funds do participate in the forex market, and when hedge funds participate in the forex market, they act as market movers. We call these ones market makers. Market makers. And we call these ones the market movers. They participate in moving the market to a direction, to a certain direction. A hedge fund can move a market by investing hugely. If a hedge fund, a certain hedge fund, wants the Kenyan currency to go down, the hedge fund will bring inflation to the country, and definitely the market of that currency, or the currency, the value of that currency will depreciate. So hedge funds do move the market. They participate in the forex market as the market movers. We have the third category of people who trade forex. They are known as corporations. Corporations and big companies. These guys participate in the forex market to maintain the value of a currency. An example of a company that do participate in the forex market is a company like Microsoft in US, and another company like Huawei in China. These two companies will participate in the forex market to maintain the value of a currency. Like Huawei will not be willing to take trades with Microsoft, knowing that the value of the US dollar is down. So they do participate in the forex market, and they will maintain the value of a certain currency to make their trades become profitable, or to make their trades reasonable. Then we have another category of people who participate in the forex market. They are known as brokers. Brokers do participate in the forex market, whereby they act as intermediary between a buyer and a seller. They act as intermediary between you as a trader and the banks, the big banks like the JP Morgan Bank in America. So the brokers will participate in the forex market, acting as intermediaries between the buyer and the seller. Then we have the fifth category. They are known as retail traders. Retail traders are traders like me and you. Small traders in the forex market whose investment or whose work in the forex market is to follow the big boys. The big boys are people like the central bank, follow people like investment managers and hedge funds, know where they are moving the market, and then all you have to do is follow them. So what you'll be learning much when it comes to trading, you'll be learning on how to analyze the market and know where these guys are falling in part, or the place where these guys are falling, so that you can be able to follow them and trade like them. So being a retail trader, your participation in the forex market carries a small percentage. with these $6.6 trillion traded a day, Forex retail traders, their participation in this is less than 20%. They carry less than 20% of $6.6 trillion because they have small amount of money, and that small amount of money, they trade with it following what these big guys are doing. So all that you need to do is follow the big fish, know where they are moving the currencies, and you can follow them or move with them and make some good money. So that marks the end of Who Trades Forex. The next thing we should be talking about is, why do they trade Forex? Why do people participate in trading Forex? Why trade Forex? This takes us directly to advantages and disadvantages of Forex trading. The first and foremost advantage of Forex trading is that it is a global market. A global market running 24 hours a day, 5 days a week. So Forex market, one of the reasons as to why people love participating in the Forex market is that it is a global market. Being a global market means it is traded anywhere, anytime, as far as you are connected to internet. It is a global market. Whether you are in Kenya, whether you are in America, whether you are in Nigeria, you will still participate in the Forex market. It is traded in each and every country, anywhere in the world. Forex market is traded 24 hours a day, 5 days a week. That is from Monday to Friday. The second advantage of trading Forex is that there is a leverage advantage. And when talking about leverage advantage, we are talking about this help that the broker gives you. When it comes to trading, you cannot participate in the Forex market without the help of a broker. The broker helps you to participate in the Forex market in that even if you have small amounts of money, the broker will help you to participate in the Forex market. Generally, trading in the Forex market costs you to have $1,000. But you can participate in the Forex market with as less as $10 because of the help that the broker gives you. The broker gives you a leverage. An example of a broker who gives you a leverage to participate in the Forex market is a broker like FX Pesa or EGM. FX Pesa is a broker in Kenya who helps traders to participate in the Forex market with as less as $1, as less as $5, whereas generally participating in the Forex market needs you to have like $1,000. So one of the advantages of being in the Forex market is that there are brokers who gives you leverage, and it might work as for you, and you might get something good from these $10. The other thing is that the Forex market has high liquidity. Having that, we have $6.6 trillion. That liquidity make it an advantage to Forex traders in that when they make their profit, they'll be assured of taking their profits fully because there is no one to compete with, there is no one to fight with when it gets to taking the profit. Go Google or do a research on someone known as George Soros. One of the greatest traders that we have, renowned well for trading, making profits, and when it got to being paid, he left the Bank of England broke. He is known as the man who broke the Bank of England, George Soros. So you can be assured of high liquidity being an advantage when it comes to trading. We have another thing. It is very easy to start. It is very easy to start off when it comes to trading. You don't need to have much. You just need to have an account open with your email address and with an email address actually. You verify your identity, then you can start with a small amount of money. It is very easy. So that makes another advantage of trading Forex. You'll be having a guaranteed limited risk. Guaranteed limited risk. A guaranteed limited risk. This helps you when it comes to trading. You can be able to limit your risks unlike when it comes to gambling. In gambling, when you are losing, if you have placed a stake of $500, when it comes to losing, you lose completely. You lose one game, you lose everything. But in the forex market, you can be able to control, or you can be able to limit your risk. When risking $500, you can minimize your losses to $10 or even to $20. You can lose this small, because forex market has a way of limiting your losses or limiting your risks. Another advantage when it comes to trading forex is that high volatility. You can decide to place a trade, and once you place a trade, high volatility works on your favor. It makes it an advantage to the forex market or to the forex traders, in that sometimes high liquidity, high volatility will work on your side or on your favor, and you can be assured of making something good in the forex market. Those are some but a few of the advantages of trading forex market, and having that each and everything that has advantages has their own disadvantages. We say that some of the disadvantages of trading forex is that, one, it is very easy to lose money. It is very easy to lose money when it comes to trading. Secondly, the high volatility might work against you, and in this case, you can be guaranteed of losing when it comes to losing, and you lose really. The other disadvantage of trading forex market is that the risk factor risk is always guaranteed. What you do, you just have to minimize it, or you have to limit it. Risk is always guaranteed. You just have to limit it when it comes to trading. So risk factor is a disadvantage when it comes to trading. And the last thing is that the price determination factor. Determining the direction of the price, or telling the direction of the price, becomes one of the disadvantages of trading forex. It's something that will take time before you understand how to determine the price of a currency and where it is headed. But having that, you'll be learning. That's why we are here, to teach you how to determine the price, the direction of prices, determine how the prices behave with time, and how you can benefit from that change in price within that given period of time. So those are the disadvantages of forex trading. But all in all, we say that when it comes to trading, it calls you to have discipline, it calls you to do much practice, and with that, you can outdo this. You can outdo the disadvantage of losing money easily. You can outdo the disadvantage of losing when it comes to losing. And also, it will be very easy when, to determine the price. That is after consistency, practicing, after trying every now and then, and being disciplined enough. So that comes to the end of today's lesson. And what I would urge you is that you need to trade. You need to learn how to trade forex. You can't just go in and start trading because you have heard that we have all those advantages. Remember that there are these disadvantages, and it will be very easy to lose money when you trade without learning. Forex trading needs you to be assured, or you need to familiarize yourself with the risks that are associated with it, and you need to learn how to trade forex so that you can be able to fight this thing. You can be able to fight price determination factor. You can be able to fight this ease of losing money in forex. So come learn with us, and we'll teach you how to trade with ease.